6 months ago, commentators were insistent that house prices and rental incomes would remain high, having fared better than most sectors, let's face it, during COVID, and with demand exceeding supply. Now, the narrative is very different, with forecasts of a dip in housing prices, a squeeze on household incomes, and higher interest rates. What is therefore the landscape looking like now for property investors? So Meta Property is an independent property developer specializing in residential refurbishments and rebuild projects, principally across Greater London. Our focus, they would say, lies in identifying and developing distressed properties, allowing the aim of unlocking the true financial potential. And I'm very pleased to say today, we'd like to welcome Mr. Waqas Khan, Director at Meta Property Developments, and Edward Checkley on the financial side of property development. Gentlemen, good afternoon to you. Now, tell us a little bit about your background and why Meta Property was created, Waqas.
Well, good afternoon, Nick, and thank you very much for that incredible introduction. I feel like you've made my job really easy. That was incredible. I appreciate that. So Meta Developments is a development company that is an extension of my own career of investing in property over the last 15, 16 years, mainly in Greater London, but we've touched on other places of the UK as well, allowing for what I believe is for the average investor to be able to take advantage of the ecosystem that we've created in the property industry. We're not just your average developer and not just looking for your average deals, but our view is that we can build an ecosystem where we can de-risk investing in property at multiple stages of the development process. And part and parcel of that is actually the finance side of things, which is where Ed comes in as well.
So I've been mortgage broking for 15 years. Previously, I was a director at a large UK mortgage brokerage, London mortgage brokerage. And essentially, during my years of work at that particular firm, we dealt with all levels of complexity and loan size. And it was more about problem solving than it was about looking at the top of a best buys table, for example. And I wanted to improve the whole process of seeking finance and how you're advised on finance. So a couple of years back, we set up Advius with the aim of delivering more complex solutions, but in an advised format. So the client doesn't see the complexity, but the borrower gets exactly what they're looking for and is advised on all the solutions, which works perfectly with what Meta does and Waqas, who I've known for many years, because the different types of development that we see with Meta mean that I'm essentially stretched in terms of finding the right solution. It's never run-of-the-mill standard. There's always some sort of angle, and we're tried and tested to bring the best possible finance solution for that.
Interestingly, the time that you both entered the market looks very different to how it is now. Waqas, what are your thoughts on the UK property market as we sit here today? And what does it mean for Meta Investments' approach?
So, Nick, I think having had the privilege, unfortunately, to have been in the market when the last crash happened in 2008, I don't think there's going to be many differences to that time. I think the next couple of years are going to be difficult. They're going to be felt by almost everyone in the market, in particular those who are going to see their interest rates climbing to the levels that we don't necessarily even know yet. So I think in general, everyone understands that the property market is going to go through a difficult time. To navigate that kind of a market is very, very difficult, especially if you don't have the experience to do so. However, if you can, some of the largest and most incredible opportunities come during times of turmoil. Fortunately, not only do we have many years of experience in the team that Meta Developments has behind it, but we saw this coming to a degree where we were ready with the right capital to be able to take advantage of the right kind of deals that I think will be presented over the next 12 to 18 months.
And Edward, in terms of finance, it's a completely different picture as well, isn't it? I mean, what is your view essentially on what the current UK property market is like? And will that mean, have you had to reshape your strategy with Meta?
Very much so. I mean, in terms of the wider market, where the property investor could have been before, perhaps someone who wanted to buy a buy-to-let property, just something as an alternative to their pension pot. Now they have to seriously look at the yield gained by that property, because interest rates have increased, lenders' stress rates have increased, and fundamentally some of those deals just do not stack up right now. However, the market for the end user is still very much alive. Interest rates have settled. First-time buyers want to buy a property. Home movers want to move for the right property. And stock is really quite poor. There is still a supply and demand issue. And so it's about educating clients, making sure that they're choosing the right developments, giving them live on-time information as to what to expect maybe at the end of a development, what sort of interest rates you're going to get, and very much having that conversation, that open conversation, not just trying to arrange a financial product for the sake of it if it's going to cause a problem in 18 months' time. So it's very much a case of working in partnership with Meta, having a look at the fundamentals of that deal and seeing what the end result will be, and just saying, do you think that you will sell that quite quickly? How long will that property take to to complete on a sale? What are the alternatives? Because maybe letting the property out, as an end result isn't a viable option. So it very much needs to cater for an end user, a first-time buyer, and it's just about having that open conversation as to the current market.
You see, it's very interesting, because what you've really pointed to there, the way I read it, is actually a very customized solution for an investor, rather than a one-size-fits-all product, which I suppose we're all familiar with. So let me ask you this: what type of investors are investing in Meta? And do you, having said what I've said about a one-size-fits-all, do you have an ideal investor type? And could you perhaps highlight in your answer some of the reasons why some of your current investors have chosen to invest with Meta, Waqas?
So Nick, before I answer that question about what the ideal investor is, actually what I want to highlight is a principle that we work towards, and that's education. I always find that in the UK, where property is such an accessible asset class, a lot of people want to invest in it, but don't necessarily know what they're doing. And through experience, we've realized the more we try to bring the investor into the fold and educate them, not just about what we do or how we do it, but how it's supposed to work, it makes our life as an investor, as someone who, as a developer, easier, the person that's being invested into, but also gives the investor a level of security and transparency. So I think it's not really about how much a person is investing or an investor is investing. We have investors that invest £10,000. We have investors who invest £500,000 to £1 million in their own individual projects. I think what's important to us is to ensure that there's a level of transparency so that we can educate the investor and really bring him into the fold, so that we risk mitigate even the investment side from a knowledge perspective, if that makes sense.
And I've certainly seen by working with you how transparent you are, and in terms of all your reporting on figures, the accuracy, working with lenders, you've always been very transparent with the lender partners. I think that's really crucial when you've got so many different parties involved in one project, to make sure that it's deliverable. Everyone knows where they stand. There's nothing hidden, and it's all honest and upfront. And it certainly means that we've been able to build strong relationships with lenders, and it makes the whole process a lot smoother the next time around, and actually in that case more deliverable, because there are less unknowns, and relationships are key in this industry.
But for many people, and you touched on this briefly in your earlier answer, Waqas, for many people, these are relatively uncertain times, and you've explained that there are opportunities in that as well. But as I say, you touched on this. How would you crystallize what Meta does to manage risk? And in particular, during these uncertain times, what does that translate into? What does that mean for the investor?
Okay, so to answer that question thoroughly, I'll give you my view of the different parts of what investing in property is about. So, you know, a lot of people know that you have to find a property to start off with. You then have the purchasing process, the legal process of making sure you got the right planning permission, right consents. You don't have any risk from a legal perspective to to get the value out of the property that you want to. There's the financing side of it, as in how do you actually purchase it? You'll have your investors on one side, you'll have your financing on the other side. How do you marry that up to ensure that it's right for this project? Then there's the actual build, so actually developing the property. Now, whether it's a quick refurbishment or a bottom-up building of a brand new house, it still has a level of risk attached to it. And then there's obviously the selling and the exit of it, whether you refinance or hold on to the property or whether you sell it on the open market. And I think the key thing to understand is that there's lots of people that do one or two of those things correctly. And by no means am I saying that Meta does every single one of those parts perfectly. But from our background, we're risk mitigators first. So I'll give you an example. When it comes to purchasing a property, our principle is that we make our money on the purchase, not the exit. Now, what I mean by that, we focus on mainly distressed assets and assets where we know we're buying below market value for some sort of competitive, in some sort of competitive advantage, which means we usually have a margin built into the project even before we start adding the value through the build. Now, let's get to the build. One of the biggest complications over the last 2.5 years during COVID has been construction. Labor has gone up in price, material prices have skyrocketed, and at no point we're anywhere near stable. So, well, how do you mitigate that? And this might seem extreme, but we essentially started our own construction company in the last 1.5 years. And that in itself has become such a competitive advantage, especially in the price range that we focus on here in London, which is, you know, anything from £1 million to £2.5 million purchase price. To be able to have that competitive advantage, I cannot stress enough what it means for us to have control over our costs and our timelines. You know, most developers our size actually still have to go out and tender for work. We don't have to do that anymore. Now, in the current times, the difficult part becomes, well, the exit. And well and truly, that will be still, even for Meta, a challenge. Now, how do we overcome that challenge? I believe that the product will sell itself. I believe to add true value and produce a product of quality for the type of end user that we're focusing on in any development, whether that be a development in Collier's Wood, Southwest London, in Willesden Green, in Mitcham, or in Woolwich. It doesn't matter. What we do is we develop and build with the end user in mind. We don't want to just build what we want to build. We want to build for someone that we know at the end is going to actually buy a property. I think that's the only and the best way we can risk mitigate the exit of a deal.
Edward, I suppose the same question. I mean, what finance options can be developed to help mitigate risk, and what impact does that have on any eventual product offering to the client?
The finance market for property development and for short-term financing for light and heavy refurb, as it's known, is immense. There are so many lenders in this space, and there are lenders who promise the earth and do not deliver. So it's so important to build up relationships and understand the property and the client first as much as you can, and have that honest and open relationship, so that when you're presenting them to a lender, you know what you're talking about, and you can deliver on the project, on the financing of the project. I think what's really key in terms of where Meta comes into this is finding those opportunities. You know, as Waqas has said, you know, he will make sure the profit, the money on a deal is made on the way in. And so whether it's the negotiating the right price, or actually seeing an opportunity. For example, we financed the purchase of a company to lower the stamp duty outgoing on a particular purchase. And just by virtue of that, it needs a specialist lender who is willing to enter into the legal process of that type of purchase to engage. And so that was absolutely crucial. And so, cutting out all of the lenders who just will not deliver at the start is crucial. And Waqas understands that to make sure that that finance is deliverable, it's not all about the headline rate. It's not all about the potential, small saving. It's about getting finance that is deliverable to ensure that the deal is as profitable as can be. And that's very much the case in terms of the mitigating the risk on the exit. Whereas most clients or developers will hold off until the last minute on development finance and take it right to the end of the term before looking at their options. The conversation between us has been completely fluid, open, and transparent, and that has ensured that we are applying for development exit finance to bring down the cost of finance as early on in the process as possible, and it also extends the sales period for up to 12 months to ensure that the best price is achieved on the property. And I think having those honest conversations with a client who is pragmatic is it really does achieve the best outcomes.
You put a lot of emphasis on transparency, which I know is something that is huge value and very, very important. So let me test that a little bit, if I may, because we've touched on your thoughts on the UK property market and how that, I suppose the question then is, look, how will that affect deals looking ahead? You very well articulated, if you like, the steps you've taken in a typical deal. But as we look ahead now, the current situation of the property market, is your strategy nevertheless flexible enough to change? Do you think it needs to change now? When you must join the rest of us, be looking ahead and thinking, not quite sure what's going to happen here.
Sure, and I think in order to answer that question, I'll revert back to the steps that I mentioned before. And if you kind of look at them as dials, where you can balance out one side over the other, I think the most important thing is that we are able to be dynamic moving into the coming few months. And what I mean by that is, it will be easy for me to say that, oh, we're just going to be looking to get the best price on a property. And the truth and the reality of it is you're not always going to be able to do that. But in certain circumstances, we might not be able to get the best purchase price initially, but we know that because of a build company, our in-house construction company, we could probably execute that deal better than the average person looking at that deal.
But may I just press you on that? Where do you see the best opportunities coming up ahead in the marketplace to apply your strategy of investment choices that you've made?
So I think the opportunities over the next 12 to 18 months are going to be really lying in the parts of the property market where people just won't be able to afford to keep going. And that's not just your end user who can't pay their mortgage anymore. It's going to be your developer that doesn't seem to be able to finish the development anymore. They may have, not managed their finances properly or not managed the bill properly. It could be repossessions that come from the commercial side of things. So, property-based companies that are becoming insolvent, that have to sell stock off. The next 12 to 18 months, unfortunately, is going to come from a place where we would be looking to step in where others just can't proceed anymore. And that's really where the true value is going to come from, along with the other benefits from having our meta ecosystem as developed as it is.
I think the one of the main factors of opportunity heading into next year is really, with the increase in finance costs, there are going to be business models which are now flawed. Investment portfolios which won't stack up on a refinance, upcoming EPC changes for landlords. The squeeze on landlords is ever present, and those particular investors might be looking to exit the market, and with that exit, there will be opportunities to take over those properties and have a fresh view on them. Have they been underdeveloped? Is there opportunity? Is there potential change of use? Splitting the property up in certain areas from a house into flats as a very simple example, but one that may have been overlooked by a long-term owner who didn't see it. They had they were used to the property being a house and not seeing the opportunity. So I think there are many potential options coming about just by the developing change in interest rates.
Let's draw this to a close, if I may. It's been a very interesting perspective, and you're clearly working very closely together and your thinking is aligned. But, the future in a nutshell, is the future bright is the wrong word, but have we cause for can investors still be optimistic, Waqas?
So Nick, absolutely. I don't think, it's very easy to get caught into the fear mongering of social media and the mass media in general during the times that we're heading into. Don't get me wrong, I don't think it's going to be easy times ahead in a very challenging market over the next couple of years, maybe even. And often it is the ones that have either placed themselves well, have either experienced a crash before, or even have educated themselves, that can take advantage of an opportunity like this, because I do believe it's an opportunity rather than not. And it's really only that knowledge gap and that preparation that doesn't allow the average investor to be able to take advantage of that. However, I do think people like ourselves as Meta Developments, who provide that service and provide that opportunity for anyone to come along for the ride, be educated, and actually make a stable, solid return whilst we mitigate risks even in times moving forward. I definitely think there is still room for everyone to grow and profit.
And I think from that perspective, you're completely right that the right opportunities will be there for you. The market we're entering into now is a much clearer one than it was back from last month, where we didn't know where interest rates were going to be heading. There's absolute chaos in government. Now we know where the market's heading to, and interest rates are stabilizing. And I think if we look at the long-term average of where interest rates have been and where borrowers are have been borrowing money 10, 15 years ago, having a base rate of 3 or 4% is completely normal. And as soon as everyone gets comfortable and first-time buyers are entering the market at that level, I think there will be the right end user for your developments.
Gentlemen, thank you very much for your time today. Mr. Waqas Khan, Director at Meta Property Developments, and Edward Checkley from Advius, with his contribution today in a partnership that will help guide us through what I suspect is going to be interesting times for the property investment market.
Thank you very much, Nick.
Thank you, Nick.